What does it mean to be financially independent? Well, you all say you want it, but how are you actually there? And do you actually have a roadmap to get you there? That's what we do. I have 6 New York Times, starting with this, which I'm going to let you download, version 2. It has 7 stories on how they became millionaires in 7 different families, as well as 40 other testimonials and brief stories on how they became millionaires and becoming financially independent. You can all do it. You just haven't been taught to do it, and it's not going to get taught at a school, even if it's a university that teaches entrepreneurial training. It's just not going to happen. You've got to lean in close to us. If you want to be a millionaire, my favorite saying is then hang out with us, because we hang out very differently than what you assume how it's going to go. So first, let's define what is financial independence. Number 2, why income matters more than your net worth. And number 3, how do you know when you're actually there? What do your indicators say, and how do you know your data points? Because a lot of you live very elusively and you actually don't track, you don't reconcile your bank accounts, you don't reconcile your credit cards, you actually don't even have bookkeeping. So your money's kind of everywhere, and as long as you have in your bank account, you think you're okay. That's a really bad way to roll. So number 1, let's talk about what is financial independence. What does it mean? Financial independence means your assets are generating enough income to cover your lifestyle. So if your active income went away, you have enough money. That's actually the definition of wealth. Wealth and financial independence in my world is the same. In the Millionaire Maker, we talk a lot about the money that you have put away, that you've invested. So the patterns of millionaires, the patterns of those who are becoming financial independent, we make money, we invest money. We use good debt and arbitrage it as a way to accelerate if you have to catch up. Because some of you are meeting us when you're in your later 40s, 50s, 60s, and you haven't even begun your asset acquisitions. So you're making money, spending money, you look like you have a great lifestyle, but you're really not living the principle of and making a pathway to becoming financially independent. Financial independence, it's income that replaces your paycheck. It's when your time actually starts mattering to you and you start really valuing your time versus other things that are just busy work. Decisions are made without fear. Decisions are made when you're financially independent based on a lot of due diligence and about just you having a level of understanding and leaning in. Again, so many of you business owners are non-finance oriented and you're just accounting on a bookkeeper or a CPA to tell you what to do. You need to tell them what to do. So what we do different at Integrated Wealth is we teach you to lead the team versus be led around and hope that your goal is their goal. It's not. It never is. I cannot scream that from the rooftops. So many of you rely on other people to get your dream and goal versus you drive and you learn it and read all the books. We're giving you a full download. I challenge you to read it in 3 to 4 hours. You totally can do it. So income is critical, and why it matters more than net worth is I have net worth millionaires who are worth 85 million, 37 million, 170 million. I have a lot of high net worth millionaires. The problem is the way they invested doesn't produce enough cash flow. So that's either lack of understanding, again, lack of learning, lack of understanding of how to get the real estate to perform where you actually have the cash flow. And then what we always call is how do you force appreciate the rent? Meaning how do you move from a $2,000 a month rent into $2,200 into $2,400? How do you do that? What do you have to do to the units? What do you have to do to the project? So there's a lot of ways to get to financial independence. The pattern we see the most are people who have their core operating company, which is based in their skill set. This is my core operating company. I'm doing the thing I love. I'll do it till the day I die. All right. So your core operating company, the money made into a company, an LLC, a limited partnership, S Corp, C Corp. When the company makes the money, not you personally. I don't make hardly any money. Me, Loral Langemeier, the companies make the money. Then you get to activate the greatest tax code of the greatest deductions, and you move as much of that as you can into new assets that produce even more passive income. That's the pattern of a millionaire. Not make it, spend it, have a big lifestyle, and look fabulous, and behind the scenes, your cash flow broke. A lot of people that come to us, they are higher net worth, they're millionaires, but their cash flow is not there, and they have already surrendered or sold their operating company. So now they're just in a little catch where they have a high net worth, not very liquid. And in today's environment, what's really rough about that is the interest rates coupled by commercial insurance and just insurance in general that's not being honored by a lot of projects. It gets really rough for you to actually navigate. Now, while you're here, I really want you to subscribe to this channel. I have so much to teach you. We're going on our 5th year. I want you to click that notification button. So whatever device you listen to, it's going into your device and saying, listen to Loral. I'm going to do 5 to 10, 15 minutes, maybe every day. And then grab a journal. So we have these YouTube journals that are fabulous. What day did you watch the video? What was the topic? What did you learn? And now what are you going to do about it? And build yourself an action plan so you actually are on a track to be a 3 to 5 year millionaire. Make sure you read up to chapter 3 in the book. where you can actually identify your freedom day. And if you don't know how to do that, just make $10,000 a month a first goal. So where are you and what do you need and what do you want? Make $10,000 the goal. And then how are you going to get there? And that's where you stand there and go, I don't know. That's where you need mentoring. That's where you need coaching, and you need someone to guide you so you don't make amazingly costly errors, or worse, just stand still in paralysis. Now, how do you know that you're there and how do you do this? Well, start by calculating what do you make per month? How much of that can you put away without continuing to build a lifestyle? How much could you really put away into new assets? Even if you start just by putting money into iFlip is where we do a lot of investing into the market through folios, and you can start as little as $50 or $100 a month. Now, as you get bigger and you start to get $25,000, $50,000, you'll start buying more alternative assets, real estate, other sorts of bigger projects. But in the pattern in the beginning is make it and put as much away as you can. Any excessive cash flow that you find anywhere, you want to put it towards new assets. Again, not a lifestyle. Those of you that want a second home, you don't want a second home, you want a piece of real estate, a rental real estate. It's very different when you're taxed. If you have two homes, you're taxed differently than have a primary residence and have some rental and maybe a third rental. I don't care if you want to go live in them. You have short-term rentals, you Airbnb them so you can access them. But when you call them, it's taxed differently, and how you behave in them is different. In the Millionaire Maker book, you're going to read, your cash machine, your operating company is your fastest path to independence. So if you have a big job, that's fine. But we need to figure out what's your operating company so you can activate the tax code, keep a lot of the money you make. I mean, here's just a quick statistic. For those of you who are unwilling to lean in and learn and actually pay attention, for every $10,000 you overpay in taxes a year, compound that at 20 years at a 12, 13% interest rate, you've just given $1.1 million in overpaid taxes to the government, whatever country you're in, versus put that into your own asset account. So you literally, in the last 20 years, for those of you that are a little older, probably could be a millionaire if you would have learned. So that's my invitation and request for you, is to lean in and learn. Go to askloral.com, ASKLORAL, ask a question, make a request. We'll be back tomorrow with much more to teach you.